Today, we're just going to talk about how this worldwide economic crisis that's happening, right?
Yes.
How does it really affect the Singapore's market? Welcome to episode 4 of Singapore's Real Estate Explained, where we break down investment news as well as Singapore's real estate investments into bite-sized pieces for you. And this channel is none other powered by the JNA Investments team. We have a group of investment analysts that is at our backs, backing us up with all the research and all the presentations before we can appear right in front of you. This is our 4th video. We are proud of our consistency. Not too bad, huh? Not too bad. Okay. In our first video you haven't seen, right? We are still wondering whether we'll be consistent in our content generation. But this is episode 4, hopefully not the last episode, okay? If you like it, let us know. Sometimes as humans, we need the assurance. You know what I'm saying? Okay, so today we're going to talk about something that is happening in the world's economy.
Yeah.
I have seen Silicon Valley Bank collapsed. I have seen Signature Bank collapsed. Recently, Credit Suisse is gone. Not really gone, but you know, they are
bought over by UBS.
Yes, they are bought over by UBS. And we are seeing hundreds of thousands of layoffs. Amazon, Meta, Google, Microsoft. I think Blackstone recently laid off a couple of hundreds of thousands of people as well. And on the ground, what I'm seeing is that, are your clients worried when you talk to them?
Interestingly, they seem calm.
Yeah, I think that the clients that come is because they come and find us because they have the means to buy the property. And then I think there are some other people who are really, suffering from this ramification now of the layoffs, right? I was talking to one of my clients who recently bought a unit with us, right? And he was saying that, he works at Apple. He said every single day he'll look at the email, hoping that he didn't get laid off. I think this is real. Right. And if you're watching this video, if you have gotten laid off, unfortunately, I know of some people in Google who got laid off. It is okay. Right. I think life just started. It's fine. Right. We just had to bounce back and be stronger. Yeah. And don't worry too much about it. So today we're just going to talk about how this worldwide economic crisis that's happening, right, wouldn't be as bad as the 2008 global financial crisis because then it was caused by a lot of rotten investments that were done by the bank, right?
Yes.
How does it really affect the Singapore's market? When we were going through the conversation of this talk, and both of us reminded one another that we don't want to give you that PR answer about Singapore's real estate will not be affected, blah, 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 blah. It will be affected.
Yes.
By how much? That's another question. Okay, so stay tuned to find out. Yeah. So, Chris, based on your expert opinion, do you think that Singapore's real estate market will crash? I think this is the key word, right? Because crashing means there are opportunities, right? Will it crash this year or next?
Right. So for this, stay tuned because later on we have more graph and charts to show.
Okay.
But in the overall market, we see that the Singapore property market is holding quite resilient in terms of the asset classes because of later you see holding power of Singaporeans and also along with the strong financial means that allow us to not be over leveraged in the current economy.
Absolutely. I think the strong household balance sheet is something that is important to take a look at to see whether individuals over leveraging. I think that in a key generic sense, right, the government has already put in some cooling measures ever since the 2008 GFC, the 1996 Asian financial crisis, as well as the 2013 market, where there were like 12 rounds of cooling measures that came in to regulate the market so that the market can grow steadily but not too bullish, right?
Definitely.
And during COVID, we haven't seen much of an impact in property prices. Actually, in actual fact, HDB prices have reached all-time high then. And we're also seeing that, a lot of private property prices in terms of transactions, new launches that were sold have reached record transactions as well. So let's dive deep into the slides and let's see how does US bank failures, right, actually affect Singapore's property, right? Let's go in.
Right. So to understand US bank failure, let's look at the context of what happened. So the two banks, Silicon Valley and Signature Bank, and also Credit Suisse, they recently went through this entire economic crisis. And the key thing, if we follow the news, the one main reason is because most of this bank money is actually parked in by a tech company. They recently had a meltdown and they started having this thing called bank run where they start drawing out money. And if you know what happened for Silicon Valley Bank is they park a lot of money in this thing called bonds, which is illiquid, something like 30 years bonds.
Yeah.
And because of the high interest rate that happened,
yes,
a lot of them, they and it's illiquid. When they liquidate something that's like bonds, they have to take a loss. They cause their balance sheet to be even worse. So in the end, it caused it to crash.
Yes.
So these are the three banks, but most of these banks have one thing in common. Okay, especially Silicon Valley Bank and Signature Bank.
Yes.
Is that most of the money comes in from tech companies, highly volatile companies that they benefit from the bull run in 2020, where a lot of money is injected.
Yeah.
So when a bank run, this causes the bank to collapse, but it's not representative of the biggest bank in the entire economy.
Yep.
Because those big banks like Bank of America, etc., they are still holding pretty strong. Just that recent stock have tanked, but nonetheless, they are still holding strong in terms of financial balance sheet.
Absolutely. Okay, so this is just a context about what happened in these banks. I'm hearing bank runs where people are aggressively drawing out money. This affects the sentiments on the ground where people are saying like, can you imagine DBS? Suddenly you see like people drawing up billions. I'm a DBS user, so I'll be like a bit worried, right?
Yep.
And then also because as what Chris has mentioned, right, majority of these banks support tech firms, right? Actually, if I'm not wrong, Signature Bank and Silicon Valley Bank, they actually specialize in tech startups as well. So when you see volatility in the tech world, you're going to see, people drawing out money, government bonds, commitment in government bonds. When you take out the money from the government bonds, you have to pay a penalty as well. I think even the US government is entering to regulate, the penalties that these institutions have to pay so that the banks will not collapse that much.
Definitely.
Yeah. Okay. So how does it affect Singapore's market? Actually, how is Singapore's market doing? Yeah.
Singapore market, interestingly, is still quite peaceful.
Resilient
for, maybe for the next few quarters.
Yeah.
Because on the ground, interestingly, we don't see clients suddenly coming to say, hey, the bank's going to collapse, I'm going to draw my money, going to sell my property. We don't see that.
Very funny, right?
Yeah.
I think during COVID time, right, we do see that, right? Like people are like, I'm not sure what's happening. COVID is happening. I'm not sure whether I should put money in. We did see a drop in transactions during COVID for ourselves, right? Even though the next year, following year in 2021, it was a good year for all of us. But one thing that I realized is that this time round, clients are more aggressive in buying, even though these banks, they are not doing that well, right?
Yeah, that's something interesting.
And I think till date, this year, in terms of number of transactions that our Salesforce have done and in the whole January real estate has done, we've done way more than last year, quarter in the first quarter. Yeah, so I think it's still quite resilient. Not fire sales, not talking about people selling their properties.
Yeah, we don't see it happening.
We are seeing sellers very resilient with their pricing still.
Yes, I mean maybe a bit more realistic.
Yes, because of the interest rates.
The interest rate.
Yeah,
that's not really like they slash the price like 20-30%.
There's a fire sale.
Rarely. So to understand that, we will look at the data later on in terms of the graph and charts. I think they will see why is this happening.
Yeah.
Okay, but there's a silver lining. Currently, the M1 supply is slowly increasing. Okay, understand about this. I mean, I'll be as simplistic as possible. In 2020, if you notice over here, during COVID-19 period, the government has injected a lot of money into the economy to save the economy. So what happened is that a lot of money is pumping, and this allowed the economy to stay buoyant.
Yeah.
Okay, only until recent 2022, mid of 2022, they did this thing called quantitative tightening.
Yes.
Okay, before that was quantitative easing, where they pump money in to save to inflate every price of stocks and things started rising. And that's when the banks started to feel a bit of the brunt of it, where there's money that's being tightened. Okay, only recently, if you notice, just recently, because of the recent bank runs, the government is starting to inject money back into the system again, which is a silver lining.
Yeah.
It may continue going up, it may go back down. Nonetheless, it's very hard to predict what the Fed is thinking right now.
Yeah.
But once again, it's something that we need to keep a lookout for, and we will constantly trace to see how this situation goes.
So how does the injection of, the Fed injecting more money in affects real estate?
Yeah, so how it works is this way. When Fed inject money into the economy, what will happen is all this money will flow into different asset classes. Yep. Like for example, in stocks, we saw the bull run of 2020 after the stock crash, it went up by almost like 60-70%.
Yeah.
If you catch that bull run, congratulations. Same. Okay, unfortunately. So these are things that we saw, and when money is injected into all these asset classes, because the value of money is devalued.
Yes.
But asset classes, the value will increase.
Yeah.
Because simply put, the money had become cheaper.
Yes.
So that's what usually happens for asset classes.
Yes.
It's not just in stocks, but also in real estate
as well.
That we see the bull run also happen in US also.
Yeah.
So there's something that will trigger effect across the entire world.
I remember there was a season where the US market went up all the way by 20 to 40% and then crashed by 20%. Yeah. Sometimes I'm quite thankful to be in Singapore, even though the property prices are not the cheapest, right? But when you have perspective of foreign markets, right, and you have perspective of foreign clients coming to tell you that, hey, actually yours is quite affordable, you get to understand we are so blessed to stay in Singapore because the government controls the market well. right? Yeah. Not there to stifle wealth, not there to stop growth, but actually there to encourage slow growth. Yeah, responsible.
Yeah, that's why to answer the question, okay, how does it affect Singapore property market?
Yeah.
Today we will dive deep into the property market itself.
Yeah.
The first thing I think we can look at is in terms of interest rates,
Yes.
because it's something that's very close to our heart.
Yes.
And something that the banks is also interrelated.
Yes.
Okay. So one thing we can trace is you understand why the interest rate hike. Okay, ever since 1994 is the highest hike. Is I believe, I think most people know, to curb inflation. That's something that we are very particular about right now, because we don't want it to be too inflated. And by doing this, okay, what we can do, in fact, okay, a very simple thing that we can always pitch against is to look at how our interest rate, okay, is tied to our property market in Singapore and superimpose both of them. And for that, I found a very interesting correlation, okay, by using this, okay. So what happened is that, if you notice, okay, there are two phases you need to take note. One is before 2013 and one is after 2013. Okay, before 2013, if you notice, okay, whenever the interest rate, okay, drops, okay, what we notice is the property price of Singapore property tends to rise very quickly.
Yep.
Okay, but when interest rate remains high, okay, for some period of time, okay, you must understand back then, the thing that caused it to crash wasn't because of high interest rate, because of another incident which I share later on in terms of fundamental Singapore real estate. But even if it remained high after a while, you notice the property market still continue going up later on. So I realized increased interest rate, the correlation of increasing interest rate is not that great, but whenever you notice interest rate drops over here once again, the blue line at the back, the property market start to shoot up again. So, and you see one more time, when interest rate drop one more time to low, you can see there is a bull run for real estate market. The last one was recently, when this interest rate drops, there's a bull run for property market. Okay, but you must understand what happened when interest rate high. Okay, one thing you think note is after 2013, okay, even interest rate high, you notice is the correlation is less in a sense. It's more of something that happened, which I'll share later on, in terms of global financial crisis, Asian financial crisis, and dot-com bubble. But the good thing is, after 2013, something we need to be very thankful for is this thing called total debt servicing ratio, where people are no longer as over-leveraged as last time. So what we see is the market is more stabilized today.
Yeah.
Okay, which we will trace a bit more later on how stabilized is it right now.
I always give an analogy to my clients that the market now is like a bull behind a cage and then there's a red flag in front, right? Anytime the government decides to put some easing measures in, you'll start seeing the market going for a bull run again. And the reason behind that is just very simple. Just last week, I went to Ho Chi Minh, been there for two times, right? And then I was there to analyze, I viewed like 30, 40 properties over there, met a couple of the CEOs, and I realized that, in land-scarce Singapore, it's actually a good thing. Because it means the occupancy is high. So when you want to exit, eventually there's always going to be demand. Versus in land abundant countries, you're going to see a lack of a demand, and then the exit strategy is slightly tougher. So it's not a norm that real estate can be sold within a month or two, which is what we see, sometimes even a day, right? In bigger countries like this. Yeah. So what I'm saying here is that we are going to go deep into the years, right? That the properties, why some property prices have crashed in some years, post 1996, post 2000, the 2000 to 2005 trial. What happened in Singapore's market? I think it's important to understand. And what Chris have mentioned as well, 2013 onwards, after 2013, right, when the market was in a bull run, right, and what cooled the market all the way till 2015, and then why is it on the rise again? Yeah.
That's it more later on.
Yeah.
All right. So one good thing is Singapore unemployment rate. One thing to trace is even with all the COVID-19 season and things like that, and when the economy was doing well, our unemployment rate still remained pretty stable, around 3.62% till today. And typically today we'll look more into the charts, and data about what will happen if bank were to fail. And the whole economy will go downhill. Singapore definitely have like a trickle-down effect, definitely. But one thing that we can actually look forward to is the effect is not as bad as we will see in the 2008, 1996, and 2000. Okay, so they will dissect that in this chart. Okay, so one thing to look at whether property market in Singapore will crash is look at the property bubble index. Okay, so it's a very important index to look at. Okay, so how to look at this chart is at 2021. Okay, our property bubble index is going at 0.52. Okay, so how to read this chart is the higher the number, okay, the more risky the bubble. So red is talking about really a bubble. Okay, below 1 to 1.5, I say is overvalued, and actually below 0.5, we're looking at undervalued or good value.
Dubai seems to be quite a good place, huh?
Yeah, it seems like it. There's
maybe we have a Jane in Dubai soon.
good idea. Let's fly there. And one thing to take note, okay, Dubai actually went up already. I mean, sad to say, we missed out the chance. Undervalued. That's 22. Okay, but you notice, okay, let's look back. Okay, another example is Hong Kong. You notice 2021, there was a very huge bubble, 1.9.
Yeah.
That's a high bubble index. And if you notice, 2022, the bubble actually burst. The price crashed and went to 1.71. Okay. Interestingly, while property price Singapore has been rising, because how they trace this bubble, they look at your income versus our property price. That's one of the key metrics. And notice our income have been rising. In fact, if people may not know, the property bubble index actually dipped. Okay, although our price have been rising, 0.52 to 0.5.
Yeah.
And I said to say Dubai, we missed a chance. I mean, 2021, it was undervalued. I mean, way undervalued. Then it went back up again.
Which also means that the growth of income in Singapore, it's actually higher than the growth of property prices.
Yes,
right?
correct.
And one thing that we got to understand is this: market will only crash if there's already a bubble that is forming, right? And the bubble can only be formed because of two main things. Number one is increased speculative activities, speculation happening, or even the bank and institutions being very relaxed in giving out loans, which you are not seeing it happening. MSR, your interest rates that's not used for the calculation has increased. You're talking about higher TDSR, the LTV has also changed. And another thing is this: if the income rate of Singaporeans doesn't grow as high as the property rate here, right, you'll see a problem because it becomes unaffordable. And that's when the bubble is formed. So remember one thing: in a regulated economy or regulated real estate market like Singapore, the property prices will crash if there's a huge bubble.
Yes, you're
and
right.
you know that Singapore is actually making housing affordable through HDB. So looking at UBS, right, I'm certain that there is not much of a bubble that's happening right now in today's market, even though property prices are increasing, like what you've mentioned.
Yes, you're right.
Yeah.
Because our income is catching up to it.
Yeah.
That's something that it's a safe bet, I guess.
Yeah.
Okay. And one thing, the second thing to take note is this thing called the technical analysis of property bubble. Okay. How to read this chart is the blue line represents this thing called the property price index.
Yeah.
Okay, we trace
The
two
PPI.
things. PPI, which is the private property price index, which is tracing the prices of Singapore property and also the number of transaction. And the orange line you see on this graph, over here, is actually looking at this thing called the gross domestic product, the GDP, which is quite tied to our income. So how to read this chart is, you notice, if you trace back, and 1985, there was during the Great Depression, 1984, Great Depression period. There's a 1996 Asian financial crisis and a 2000 dot-com bubble and a 2008 global financial crisis. There's one thing in common. We notice the property price index, the blue line, actually exceeds the orange line. That's why there's a bubble. You can see
the gap there's between the blue and the orange line is where the property bubble is formed. So actually property bubble can be easily seen or calculated through the GDP versus the property price index.
Yes, it's a very clear indication.
And a lot of people, they are saying that it's because the financial crisis caused property prices to collapse. It's also because of the Asian financial crisis that caused the property prices to collapse. Actually, simply put, it's about the growth of income and how much property price has grown far exceeds the income, and that caused the bubble because of unaffordability. And of course, in a highly speculative environment, if the banks collapse, if there's economic crisis, what's going to happen next is that speculators are going to offload their properties like fire sale because they are treating it like a stock market. But right now, when I talk to owners on the ground, right, and I ask them, how do you feel about interest rates rising? They always tell me this: I can hold for my kids, no problem, because the household balance sheet is actually quite healthy, right? So later on, we're going to see how Singaporeans, what are Singaporeans like, right? Are we savers? Are we spenders? Or, are we speculators, right? Okay, so what I'm saying now is in the year 2022 onwards, there is no property bubble.
Yes, because one thing they know is in 2012, 2013, when government cooling measures, there's serious cooling measures, it caused our property price index, which traces most transaction and also pricing to fall. And that's something that while income continued to rise, our property price did not really catch up. Till 2020, we noticed there's a dip in GDP where could be a bubble, it could have, but after that it rebounded very quickly and causing the property price to rise. And it's something that we're tracing very, very closely to make sure that there's no bubble in Singapore. And today, where we are right now, GDP, you can see, is still growing in tandem to a property price index, which is very safe. You don't see it forming a bubble like the past. And one key thing later we'll take note is because of this thing called the total debt servicing ratio. Why? Because if you trace in 1996 2000 and 2008 GFC, something in common is people over leverage.
Yes.
They borrow way beyond their means and they
Yes.
speculate, they gear up, means they buy a property, probably appreciate in price, they cash out more money
Yes.
and they buy another property and keep redoing the same process.
Yeah, which is what happened
what-
in your family as well, right?
Yes, to some extent.
And I heard that in the past, right, you can even take $1,000 out to loan a few $1 million in loan, you know.
Correct.
That's how unregulated banks were. Yeah. And if you see that deep trial that happened during the 2000 dot-com bust all the way towards 2006, right? What happened then was the dot-com bust happened, there was H1N1 and there was also SARS. That's why it affected the local market quite a bit because SARS was like it was like COVID-19, right? You can't go out, you have to wear masks, you can't go for viewings and stuff like that.
Yeah,
Yeah,
interesting.
yeah.
Yeah. And there's something that we need to take note because one thing that happened in common, as I mentioned just now, is over leveraging. And something that we do not want to see in today's economy.
Yes.
But good thing is after 2013, which I mentioned, the exact date is 29th June 2013, TDSR is implemented. And what TDSR does is it limits your loan
Yes.
to the same amount of income. You may only borrow maybe, last time, 2 million,
Yeah.
but now you can borrow maybe 1.1,
Yes.
1.2. And this kill off the market. People stop over speculating,
Yes.
people stop over leveraging to borrow.
Yes.
And this creates a very strong base for Singapore.
Yes, I think that the TDSR has ensured that the government has done a great job. It is there are naysayers that say it's not good because it regulates the market, but the government has done a great job because they prevent over speculation, they ensure affordability. And actually now what we are seeing now is that the incomes among Singaporeans are great. It's just that the barrier to entry of buying a property now is the down payment.
Yes,
yeah.
right.
And I think even the LTV, the government has done a good job in the loan to value ratio to make sure that if you want to buy a property, you make sure that you can pay the down payment first.
Yes,
right?
correct.
Yeah.
Yeah, so most people are capped not by income, but actually by the down payment.
Yes.
It's quite interesting.
Yes.
Yeah. And with this, right, this allows us to allow the property market to grow in tandem to GDP. So it's very different from the past three financial, even past four over here, 1983, which is Great Depression period, where people are no longer over leveraged in the ways they buy property, but more safe. So you don't see panic selling right now in the market. Very interesting.
Yeah, interesting.
Okay, and the second thing which Shiriz mentioned us now is to look at our household balance sheet because it shows us whether our entire Singapore market is over leveraged and whether we are borrowing way beyond our means. Okay, so one thing we can trace is actually look at this. Okay, so there are three charts over here. The first chart represents our household financial assets, means liquid assets. Okay, liquid assets like stocks, like something like no cash. All these are financial assets. Okay, you can see over the years since 2008. Our cash and financial asset have been growing. Okay, the blue line actually represents our debt liability, which includes everything, car loan, property loan, everything. So you can see the gap is widening, which is very safe.
Yeah.
Okay, unlike there are some other countries where
you see debt outstrips all the financial assets that people
correct,
have.
which is very dangerous.
Yeah.
And next thing is in terms of over here, you can take note, residential property assets has also been climbing in terms of price and valuation as compared to our household net worth asset.
Yeah.
So you add these two charts together, it gives you this entire thing called asset, which is basically your asset class.
Yep.
Minus your liability, there is your equity, which you can notice it have been widening over the past 2 decades, which is very, very healthy for our economy to run.
Yeah. To bring us back to the ground so that we can start speaking English rather than Greek, right? What does this mean? I mean, does this mean that there are going to be fire sales in the market, or does it mean that there is not going to be fire sales in the market?
So if you imagine in terms of financial asset, okay, in terms of the asset class and the cash you hold is more than your debt, and this amount of cash is growing over time.
Yep.
It shows that unlikely that there will be
surplus.
There's surplus, correct?
Yes.
So unlikely there will be like people fire selling because they
can hold on to the property right now.
Correct.
Understand. Okay.
Yeah.
And it's quite common nowadays that you see our parents' generation, right? Those who are in their 50s or even their 60s, fully paying their properties, right?
Yes.
I think they have seen people getting burned during the GFC, the AFC, as well as the dot-com bust, and even some holding a lot of cash.
Yes,
Right?
you're right.
It's a leveraging concept in the past is taboo. Right? But right now, we will teach you how to leverage safely.
Right. It's super saver. A lot of them are super savers, saving assets. A bit more, Singapore is a bit more like prudent.
Very prudent.
Very prudent.
Yeah.
And there's something that, it's good because it provides a very strong fundamental for Singapore real estate rather than simply speculative.
Absolutely.
Yeah.
Yeah.
Okay. And something that take note, okay, another data to take a look is, whatever I mentioned just now is the financial assets, which includes, currency deposit, include CPF and also include your stocks. This adds up to your financial assets.
Yeah.
Okay. And our residential property assets is the total property value that we have, which interestingly, you notice actually less than our financial assets. Okay. And the last one is in terms of our liability. So which includes around 260 billion of housing loan. So if you net off, you add these two together, these two assets, you net off your liability, this is net worth.
Yeah.
Which is almost 6.8 times our liability. Okay, so what this means, okay, to put it in simple terms, is that if we liquidate all our property, our financial assets, and pay down all our loan, that's whatever cash will remain in terms of equity. This is actually can pay our loan 6 times.
Yeah.
Which
close to 7 times.
7 times.
Yeah.
Which shows that Singapore.
You could have easily afforded 7 more properties, but you only buy 1.
Correct.
Yeah, to put it simply.
Very simply. Yeah, correct. So there's something that is very strong.
Yeah.
And even if you talk about only taking out property assets, taking out your stocks and your bonds, your currency, which is free cash, and also your CPF add together is almost close to $854 billion. Okay. And this itself, right, is still 2.3 times more than your liability.
Yeah.
Which shows that if you liquidate all your cash and pay down your loan, you still have surplus left over.
Absolutely.
And that's something that very reassuring.
Yeah.
Very assuring, especially in Singapore when everything is going up and we feel like, is it getting overvalued in terms of pricing?
Yes.
All right. So with this, even if talk about cash,
Just cash. Yeah.
take out CPF, your cash itself is still almost close to 1.5 times.
Yeah.
Okay. As compared to US, if you know about US is actually 1:1. Means include 401k, include their cash, and when you add together, their debt, their cash
To
just barely cover their debt.
Yeah.
Okay, so this is this is debt. Okay, this is this is cash.
Yes.
And this is their debt.
Yeah.
Okay, their debt, total liability in terms of debt. So theirs is 1:1, which is a little dangerous in US. That's why if I'm US, properties now is in fact have dropped by around 10-15%. The point we were talking, and they expect to drop more.
And at the point we are talking, both Chris and I may be flying to Seattle soon to take a look at some real estate investment opportunities.
Yes.
Yeah.
There's
So
something for
we hope to have a global perspective in real estate investments and not limit it in Singapore as well. I think that allows us to journey with you for the next 20 and 30 years till we ascend
to heaven. All right. Okay.
All right.
So as compare, so back to this. Last thing is debt to income ratio in US 65%. Singapore is only 43%. So it's not as over leveraged as compared to overseas. So it's something that we are quite well assured of.
So what I'm saying is that actually the US debt to income ratio is actually high.
Yeah, pretty high.
Higher than way higher than Singapore.
They liquidate their cash and pay their debt, they have nothing left.
Wow.
So it's something put in global perspective.
Yeah.
That we having some reassuring numbers.
There'll be some opportunities in the US.
Yeah, maybe. That is something that we have to keep a lookout.
Yesterday I was just looking under Zillow. I saw an Ohio home at $200,000 and it's a landed. Interesting, huh?
Interesting.
Can't even buy a car here sometimes.
Yeah. But once again, we look at occupancy rate as well.
Absolutely. So the ease of exit and yield ultimately is key. Yeah.
Correct. All right. So let's take a look at the rest. Okay. Something to take note. Okay. Third point is Singapore has a safe haven.
Yeah.
Haven.
Yes. Not heaven yet, but haven. But it's fine. I think this is something that we see.
Okay.
I'm seeing a lot of Chinese residents bring money in. We serve a lot of them. Just the previous week, we brought like 7 to the show flat to take a look at some things. We see a lot of Indonesians bringing the money in. There are even a lot of individuals who are from Taiwan who just paid. We just sold a penthouse that brought $2 million ABSD in. And we have always wondered what's the reason why these clients will want to pay ABSD for these properties. But I realize that sometimes they just want to put money in a place that is safe. And Singapore is truly a safe haven. Once you experience people willing to pay $2 million to the government in ABSD to buy a property here, to put the money here, you know that it's safe. No one's going to pay $2 million if it's not a safe economy.
Correct.
Right?
But for reassurance and asset value, they know that in the next 5 to 10 years, this amount of money can be earned back.
Absolutely.
Now, that's something that gives us assurance as Singaporeans and locals.
Yeah, we love to be Singaporeans.
Yes, indeed. And in fact, a very interesting data that we also found is that in 2017, there was actually around 100 family offices that was formed in a year.
Yes.
But yes, in 2022, the number went up to 1,100 family offices in just 1 year.
Yeah.
So that's how much money that is being brought in.
And you know, fun fact, we were meeting one of the biggest immigration companies in Singapore, and they mentioned that just 2023 alone, there was already a close to 1,000 ultra high net worths that have just converted to PR in Singapore. So we may be wondering where the money flow is coming.
That's very clear.
And that's the reason why the government has done protectionistic measures to ensure that housing remain affordable for Singaporeans, right? And there's always going to be demand, right?
Yes.
We haven't even talked about the population of people yet, but the government is really being aggressive in getting all these expats and high net worths in.
Correct. So that's what we see because Singapore, not just in terms of Indonesian, Chinese, also other countries, but majority are in the Chinese country because they see Singapore as a safe harbor in terms of in this globally hostile environment. This presents Singapore as a very strong foothold to park their assets in. So this is something that we are looking out for. And this is coupled with a low tax rate. This is Singaporeans always complain of taxes. Sometimes we also do complain of taxes sometimes, but it's money that's to be given. But as compared to the entire world, even sometimes it's
we are
overseas,
so good.
China, US, this is really almost half. While other countries
I
are
heard
even
in China, right, mainland, you have to give 45% of your income out. So whatever you earn, 50% goes to the government.
Yes.
Singapore is 20% and women kwa already.
So that's the real truth. That's why in the corporate tax, okay, and inside the family offices, you can even net off certain taxes and almost have free tax. So these are things that it presents Singapore as a very safe place to park the money and also reduce the amount of taxation from the government. So one thing we take note is also the city development prospects. You can see Singapore is ranking the highest actually within this in 2021. Okay. And it has something that allows a global perspective to park their money here rather than simply looking at just like a high growth, but something that is safe.
And you want to put your money in a nation that is constantly advancing, constantly developing their cities, because that is the financial hub of the nation. And you know where the country is going to. Even though we are very developed, our government is not in the comfort zone and is still pushing frontiers, right? Last time it was like horizontal expansion, making sure that, horizontally there are many different places in the city, but now people are going towards vertical integration where we are even building sustainable ecosystems within a building. And I think that's just how smart our scholars and our government is in developing nations.
In fact, government is still storing more money. They are trying to really save up for the rainy days. That's something that we're thankful for Singapore government to do that. And along with this, the last thing we need to take note is about supply and demand in the future. This is something we have to trace. And one of the key indicators, which is already published in the papers since 2012, is this thing called the Singapore Population White Paper, which will trace what our population is heading towards. Okay, so you can see 2020, we're looking at 5.8 to 6 million in terms of total population. 2030 is hoping to hit 6.9 million. Okay, and in fact, if you notice the population growth, rate is Singapore citizens, this is PR, and this is foreigner. You can see majority of population will be fueled by foreigner. And the rationale is very simple because if you take a look at our current Singapore fertility rate is going low. We need more manpower than manforce. So, for people out there to get married
yourself,
early,
right?
Yes, think to myself, 加油 to really get be more prosperous and support Singapore economy. So what we notice over here is with this increase in terms of foreigner and PR, we're noticing that most of the PR and foreigner cannot buy a HDB in Singapore. And all this are actually heading towards private. And a lot of them, after that, they convert into Singapore citizenship. We are seeing that happening on a quite frequent basis now from foreigner to PR. This is something that the government want to head towards.
I think similar to the sentiments on the ground, I really am welcoming foreigners and expats in our nations because it feels that Singapore is now like a hub of globalization. It's like you get to meet and learn from different cultures. I love it. A lot of our clients are US citizens, Chinese citizens sometimes, and even Indonesians themselves. I think the government is going towards the right direction.
I agree. And this of real estate is pushing out towards the demand towards the private properties in the long term run. 100%. That's something we have to keep a lookout for. And one thing is, we mentioned just now, family officers, ultra high net worth, we're noticing and serving quite a few groups of this kind of clients. And this is expected to even grow by 300% by 2026. Okay, that's expecting to hit 6,000. Okay, this kind of family officers in Singapore. So this is very real because the money is being pumped into Singapore itself. Okay, in long term run. Okay, so with this, let's take a look at the next part, which is we compare the supply and demand in this short term run, the next 3 years, to see how property in Singapore will actually fare. Okay, so as I mentioned just now, this is the future demand we're looking at, where majority of the supply, the demand comes from the residents and non-resident PR, the long term run. And as I mentioned, because of poor fertility rate in Singapore, where you can see, just fun fact, 2018, the number of percent of Singapore population that's more than 65 years has exceeded the young population of 15 years. And in 2030, the aging population will be 3 times more than our young generation. So Jervis, how do you feel about this?
I'm thinking whether 2030 am I considered part of the aging population, but not yet, right? So definitely, I think increased fertility is important. I think with the food and the stress that we have nowadays, it's slightly harder to have multiple kids.
Yes,
we trust God in giving us the kids that we need. Yeah.
Thank you. Let's trust a lot. Yeah. So you can see over here, this is the main key driver because with fertility rate being outpaced, we have no choice. But
we really have no choice.
We have no choice. There's no choice at all.
Yeah. If not, the workforce will not be as productive anymore. Right? And those above 65, the aging population should already be retiring or resting already.
You're right. And West Singapore is actually only rich in human resource.
Yeah.
There's something that is inevitable.
Human capital is key.
Human capital is key. So that's when, if you understand the whole direction of what Singapore is heading towards and looking at the macro trends, the demand is heading towards the private properties that we
right now. I think in terms of summary, I'm seeing that there's strong demand. Current demand, there's strong projected demand.
Yes.
Supply-wise, how is it?
Supply-wise, yes. That's the next topic.
What if there's oversupply?
Oh, yes. Okay, so let's take a look at the supply.
Yeah.
But before that, let's wrap it up with the last point. Yeah. And most of this foreign that come in, they are not like blue collar. They're mainly in the PMETs, which is professionals, managers, executive, and technicians.
Yeah.
So a lot of them, they do have the income to support the loan and purchase and save.
Yes.
And with that, even during the COVID-19, the privatization of PMETs, you can see the unemployment rate did not rise as fast as the blue-collar workers.
Yeah.
So it's something that government is heading towards.
And what I'm seeing is that the government is actually also working towards expats who are earning like maybe $30,000 and above per month and inviting them with a quick pass, right? It's like a fast pass.
Fast pass.
Like in a theme park, right? In Singapore as well. Yeah.
Correct. And recently also came up with this thing called a T-Pass, Tech Pass, where as long as the revenue is more than 2 million in business they bring to Singapore, they can have a fast track towards a PR status subsequently.
Wow. The government is attracting wealth.
Yeah, they are attracting wealth. And that's why we can see the big jump on PMEX job and also in terms of super rich choosing Singapore.
Absolutely.
Yeah. Even with the recent PR scheme for investor, last time it was 2.5 million. You park here, you can PR, but now it's actually 25 million. They're increasing the barrel because so many people are parking money in Singapore. Yes. They have to increase the barrel. Yes. So these are things that we see is a very positive sign in terms of the global perspective of what Singapore is.
Yes, absolutely.
Okay. So if you are worried, okay, one thing you can trace once again is about the PR and non-PR population, okay, which you have to trace very carefully because if you notice 2005 to 2010, okay, the PR population almost doubled, same as the non-residents. If you notice back then, during that season, okay, the number of foreign buyers, percent foreign buyers also increased during this season. Okay, along with PR status application also almost doubled this season.
A lot of our clients have applied for PR themselves, right?
Yes. In fact, that is in 2003-2008 period. And it's repeating today. In fact, the same cycle is repeating today. And if you notice, the property price in Singapore during the same period of time, even Lehman Brothers financial crisis crashed, went back up, it's almost doubled at the same time frame. So there's something you have to trace very carefully for demand in this season. And right now, if you look at where we are, okay, after that, when the population actually government start to have a double whammy. They restrict the foreigner influx and also the PR application, which dropped by half. In fact, this is when we see the population, the price still increase, but on a slower pace.
Understand.
And so these are things that we have to trace very carefully because the cycle is coming back today.
So what I'm saying is that the growth of the property is very strongly correlated to the demand, which also means the number of residents, specifically PRs as well as foreigners, in our nation.
Yes.
And then alternatively also to see whether there's a property bubble, we look at the growth of the GDP as well as the PPI. Right.
Correct.
So I think one thing about understanding the macro view of the entire real estate climate in Singapore, right, is also getting to understand some lagging and leading indicators. The moment you can master this, you know when it's a good time to enter versus it always being a good time to enter, right? Honestly, I think in the previous few years since 2017, they were a great time to enter. You know, it was never a problem about buying a property in Singapore. But right now, with the dynamism of the market, we are seeing some lagging indicators. I think it doesn't mean that there are no opportunities, but we have to choose our opportunities wisely and most importantly, accurately.
You're right. By the right entry price and finding the right look, the right place.
Absolutely. So if you haven't watched our Tembusugram review, in the Tembusugram review, we were talking about a lot of our investment philosophies and how we actually have an investment approach that we are able to predict prices and also predict what's the good entry price. If you haven't watched it, you got to go and watch it, right? Yeah.
Definitely.
Yeah. All right, so we have understood the correlation between different factors and we have understood how there's healthy demand. There is very little speculation in the market because, our household balance sheet is very healthy. We have a surplus. What about the supply?
Right.
Is there going to be oversupply? Because economics is not just about demand, it's also about supply, right? So what
Yes.
about supply? How is the supply looking at?
Okay, so yes, you're totally correct because we have to look at the supply and compare to the demand to see whether is there oversupply, even though there's upcoming demands. So what we can take a look is this particular chart, okay, from URA. If you look at it, the red color bar chart represents the number of new private condo that come into the market every single quarter.
The new launches that are
New
coming into the
launches,
market.
correct.
Yeah.
So it's the bar chart. And the grey line represents the number of new launches that is taken up in the market. Okay, so what we notice is in 2018, 2019, 2020, okay, it's quite correlated. I mean, it's quite close, but in some cases there's some outstrip of supply. Okay, that's when you notice new launches back then, they were actually priced more sensitively.
Yes.
If you remember
Absolutely,
back then. And after 2021, what we noticed is the reverse has started to happen. Where we see there's not many new en bloc coming out. In fact, we haven't seen a lot of en bloc or government land sale coming up.
Yeah.
And the take-up rate is starting to outstrip the number of launches coming to supply as a supply. So there's something we have to keep track of, which is a good sign for a long-term run in Singapore real estate.
Yes.
So with this, okay, one way we can take a look is the average take-up rate. Okay, for the past 3 years, it's 10,620.
Yes.
But right now, if you look at the number of inventory, okay, it has almost decreased to 16,000. In fact, it's compared to 2019, where there was 40,000 unsold inventory, today's market is actually on the low side.
And most of our clients actually entered in 2019, 2020.
Yes,
yeah. So if you're watching this and you're our client, congratulations to you.
Yes, congrats. There's something very happy for.
Yeah.
And in fact, today, if you want to cut the supply will take about 1.5 years. And this 17,000, take note, this close to 16,000 supply with today is actually inclusive of both launches that have been launched in the market and also upcoming launches for the next 2 years for government land sale. So everything has been included in. So if assuming this continues, it'll take another 1.7 years to clear all the demand. And that's pretty fast actually in Singapore. And if you were to trace to be more prudent right now, if you may not know, Q3 2022, some of the latest update, okay, for supply, there's 2,409 units left. It means all the old launches that happened, okay, 2,400 units left in the market to be sold. And with this continuing of 10,000 take-up rate every single year, if there's no more launches coming up, this is something that definitely this demand is outstripping supply right now. So as a developer, what do you think? Developers, agent representative. Yes.
I am not a developer. Hopefully, I can be a developer. I made a promise to the market that at 24 that I'll be a developer eventually. Let's see how. If you want to invest in us, let us know, please. Personally, I think that what I'm seeing is that the supply, it's a little limiting right now, right? And there's always this question that people ask me, right? Hey, with so many GLS, right, or so many en blocs. Okay, let's talk about en blocs specifically, right? Does it mean that supply is increasing? Actually, you must understand one thing. It's a renewal of supply because the current en bloc that happened in the particular development also means that the supply of the units there have decreased and that was revamped into newer supply in the market as well, right? So looking at it, yep, you're right. Supply is looking limiting, right? But what about new GLS or en bloc that may be coming up soon?
Yep, you're right. And to put it in perspective, yes. And that is when the next land bid price will be out, which is even higher, which we showed in the previous videos.
Absolutely.
We're looking at some of the upcoming land bids.
Absolutely.
That's something that we have to keep a lookout for.
Absolutely. And I think on the ground, you're going to see things like en bloc news happening, but you're not seeing a lot of successful en blocs because prices that are being asked for are high because of the GLS that have happened. So I don't think there's going to be a crazy influx of supply that's coming up anytime soon in the market. If you look at the CCR market, I think in the next episode or the next few episodes, we're going to cover a little bit more about CCR. We're going to cover a bit more about what are the land that was bidded, how much the PSF you are looking at in the future, and what were the en blocs that failed, right, in CCR. You will see places like High Point, there are crazy high PSF already, but the en blocs didn't go through, right? So this is the future of the real estate market. Yeah.
Indeed.
Yeah.
Yeah, so with this, I think you can see upcoming launches 11,943 this year. Even you add these two together, the supply is still being outstripped by the upcoming demand per annum. So it's something that we need to trace very, very carefully to make sure that all these things are well kept in the next few years. But this gives us quite a lot of confidence in terms of how we look at for real estate, Singapore real estate.
Absolutely. So I think what being said, what we're trying to share with you is that you should have confidence in Singapore's real estate market. But it doesn't mean that you can go all bullish and speculative in Singapore's market. And the reason behind that is because different developments down to the different units are priced differently.
Definitely.
So just to give you a summary, right? If this is the last video that you're watching, I hope not, it's this. Okay, simply put. Number one, be confident about the macro environment, about Singapore's real estate. Number two, ensure that you have a strong and robust and proven investment methodology by the broker that is representing you to enter the market with prudence and high accuracy. I think in today's market, technical analysis has to be done right for every real estate investment. Fundamental analysis has to be done right. Comparative analysis has to be done right, down to the unit and what PSF to enter. And then it also goes down to the agent's expertise of being able to negotiate for you, whether it's in a new launch or in a resale property. And I would dare say, this year, 90% of our investment clients bought resale over new launches, right? Last year, towards the end of quarter 3 and quarter 4, we are seeing most of our buyers buying resale rather than new launches as well. So please exercise prudence, even hearing all of these things. Yeah.
Definitely.
Yeah. Yeah. So that's it. Yeah. So thank you so much for watching till the end of episode 4 of Singapore's Real Estate Explained. If you're on podcast, this is a ASMR for you. But if you're watching this video, I hope you enjoy the 4th episode of this video. We are going to continue bringing content for you. Feel free to comment down in the comment section down below, whether it's positive or negative. We are okay with everything. But most importantly, we want to understand how you feel and what are some of the questions that you want us to answer. And if you don't know yet, at www.jnarealestate.sg, you are able to check out our full-fledged editorials. Our Instagram provides you bite-sized content for you to share with your friends or share with your social circle about some of the things that you have learned. Feel free to share, right? There's no awkwardness in sharing our content. We want to empower Singaporeans to make the right real estate investments. We have seen horror stories. We hope to empower millennials like you and I, and you watching here, to make right real estate investments as well. As property prices are increasing, it's highly important to make accurate decisions. So we hope that we can catch you for the next episode. This is Jervis.
This is Christian.
Thank you for watching this episode of Singapore's Real Estate Explained.
See you.
Yes, see you. I got a brain fart for a while. Yeah, see you guys. Bye-bye.
Bye.